Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello. Welcome back to the podcast. Thank you very much for being here. You know what, you guys? I am going to be in Iowa in July. So if you are on the lookout for that, you can go to my events page and you can get tickets there. I do not have them up yet, but they should be up shortly. So check back. I know seriously, you guys, I'm not the most super organized person on the planet, in case you did not notice. This is why I hire people, because they are far more organized than I am. But I will be in Iowa. So if you are a client, we are going to do a client-only event, and then we may possibly do an event for new people as well, depending on the response that we get. But we'll be in Cedar Rapids. So those of you in and around that area that have been waiting, it is going to be July 20th, if I recall correctly. I know, seriously, here I am. Don't have any of my facts straight, but I'll be there. I'm telling you, I already have my plane ticket. I am going to, I'm going to get to visit Jolene Brown. I'm so excited. And perfect timing on my behalf because she's going to be gone otherwise. So I'm excited about that. But I will be in Cedar Rapids for a couple of days doing stuff around there. All right. Today, let's talk about if we're really debt-free, if we have policy loans. And this is something that happened early on when I had just gotten introduced to the infinite banking concept. The person that had taught me this kept telling people, well, you can borrow from your policy and pay the bank off and you're going to be debt-free. You're going to be debt-free. You're going to be debt-free. And I still hear some of that today, which drives me a little bit batty because you're not actually debt-free. Unless, of course, you decide that you are going to steal the peas, which Nelson says not to do. So for those listening that have not read Nelson's book, stealing the peas means you take a policy loan, but you never pay them back. And the interest accrues and it eats everything up in the policy and it's just a bad deal. But many people out there teaching the infinite banking concept or something like it that say that it's the infinite banking concept are talking about the fact that, oh, you can pay the bank off and then you're debt free. No, you're not. If you're going to be an honest banker, you still have debt in the policy. Granted, that debt in the policy is not getting sent to a collections agency. It's not getting sent to a credit bureau. So nobody can really see that you have the debt. All that your bank knows or lender knows is that you have some life insurance. Whatever you write down, that's all the information they can get. I actually had a client's banker call our office a couple of weeks ago and ask information on the client's policy. And I said, I'm not calling her back. I don't know if that's okay with the client for me to release this information. Just because it's a bank does not mean that I am sharing that information, nor am I obligated to share that information. I have a contract with my client. The insurance company has a contract with the insured or the owner of the policy. Even the insured, if they are not an owner of the policy, they cannot call the insurance company on your behalf and get information if you're the owner of the policy. The only person that is entitled to that information is the owner of the policy. So if the bank is asking you for that information, you get to decide if you want to give it or not. How much you want to give. I'm not going to tell you what to do. Some of my clients are just uber honest and they put everything down. Some are not. That is where all of my money is, in my life insurance. So I put everything down. And guess what? The last documents that I filled out for a loan, they didn't ask me what my loan amount was on cash value. They just asked what my cash value was. So that's what I put down. There are no terms to that loan. So this particular banker was asking, well, how does that work? I don't understand it. What do you mean, how does it work? Like, you are the lady that does the financial statements in the office for these clients, and you don't know how the life insurance piece of this works? Now, I'm not going to be hard on her because of the fact that maybe she didn't know. But if she's somebody that's touting, don't go buy whole life insurance and then we don't know how it works, ooh, I'm going to do everything I can to refrain from saying words I should not be saying. This is not something that needs to be released to the bank, in my opinion. You get to put down what you want. Your bank does not get to call our office and get information. Now, we tried to explain to this individual how the loans work, and she was not understanding it. And so maybe she should have read the book. Maybe the client will give her the book. I don't know. But these are not debt-free. Even though it looks like it on paper, these are not debt-free. Debt-free means I have no loans to repay. Debt-free might be, hey, I died and now all my debt's paid for through the policy loan. But this misconception that is debt-free is the conception of saying, I'm going to steal the peas and I don't have to be a good banker. I don't have to pay that back. That is not the case. Another thing that I just came across was, should we borrow cash value to pay premium? So let's talk about stealing the peas again. In my opinion, we're stealing the peas to buy more peas. So we're going to borrow cash value to pay premium or extra premium in year one that doesn't really need to probably be paid. You have the option to pay it, but you don't have to. So if we are going to borrow money to pay cash value, we have to be able to pay that loan back. Now, I have done this in my own policies when I did not have the money to pay the premium. I borrowed the cash value to pay the premium. But guess what? I knew that the money was coming in to repay that loan in a timely manner. And this was premium to just keep my policy going. This was not extra premium that is allowed year one. So if the policy is constructed correctly, we can put extra premium in year one. And that's absolutely fantastic. If we have it. If we don't have it, should we really be borrowing to pay extra money just to pay interest on that extra money? Let's say that it's July and our bonuses come in December, and we know we are going to have a bonus from work. Then great, fantastic. Borrow cash value to pay premium, because in December, you're going to pay back the loan on that cash value, right? But you only had maybe until July to get it in. Well, fantastic. It's a short-term note. We know the money is coming and was earmarked for that purpose. But if we're just willy-nilly doing it because we think we need to add extra money year one, that is not always the best strategy. Okay? I don't have a whole ton to say about that today. This is going to be a very short podcast because I just want to try to keep it to the point instead of rambling on forever. And then you guys get lost in all my other stuff. So there's that. Don't get hung up with the fact that you're debt-free to the bank, but you still owe money into the policy. We got to think about exactly how these things work. It's not a get-rich-quick scheme, okay? It's just how we can utilize money. All right. If you guys have not gotten the book, go get the book. Here's what's happening is I have it seems to be at least one cancellation a day because you guys are super busy in the field and I get it. I am not offended. I 100% understand you made your meeting 3 months ago when you were not as busy. So if you are one of those people that has had to cancel, I am sorry that you had to wait. Go ahead and get rescheduled for that July mark where you guys might have room, or get scheduled for August where you might have room. My calendar is not open all the way to December. However, if you want to book out that far so that you can get on the calendar, because what happens is in the winter, things get insane around here and you are all trying to get in. So if there is a short window, for those of you that are farming, if there's a short window that you can get in between planting and spraying and harvest, then do so. If you have to keep rescheduling, do so, but make sure that you stay on the calendar, because otherwise you're going to forget about it and we're never going to get started, which means we're never going to change where we're at. And the whole goal is to change where we're at. If you guys need something, let me know, maryjo@withoutthebank.com. Otherwise, grab the book, get your appointment scheduled. I hope to see you at your appointment time. Otherwise, have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.